Well, the day has come. NVIDIA's earnings are today. So if you guys want to make some big money on this move, I've got a couple of strategies that I'm going to show you in this video that can help you hedge your risk to limit downside while making good profits on the stock. Now, ultimately, I recommend holding long-term as NVIDIA has a lot of upside potential. In fact, they just got a raise in their guidance as far as stock price is concerned. A couple of analysts have raised the target price on NVIDIA from 140 up to 145. This is a very volatile time. So if you must invest in NVIDIA short term to take advantage of earnings, I'm going to show you exactly how to do it. Before we get into the video at hand with NVIDIA, I want to read a statement that I read from some different analysts and a report on NVIDIA with the earnings. And I'm going to tell you guys exactly what it says. NVIDIA stock is poised for major $298 billion market jolt as Q2 earnings loom, says Goldman Sachs. Can you imagine if NVIDIA beats expectations? Investors are closely watching NVIDIA as it prepares to release its Q2 results on Wednesday, which could result in a significant market value fluctuation. NVIDIA stock might experience a $298 billion market fluctuation following its second quarter earnings report, according to a Monday note from Goldman Sachs. Scott Rubner, a managing director at Goldman Sachs, noted that the bar for NVIDIA this season is a lot lower than it has been in recent quarters due to fundamental selling in the tech sector. NVIDIA holds the record for the biggest one-day value swing at $330 billion, which occurred in late July. According to the bank, if NVIDIA reports strong growth and forward guidance, it could surprise the stock market and lead to significant move upward. Can you imagine if NVIDIA beats expectations Wednesday? Interactive Brokers strategist Steve Sosnick emphasized NVIDIA's integral role in the market, noting more than 70% of the 25 most active trades on their platform have a connection to NVIDIA. Sosnick stated, "We've gotten quite used to seeing NVIDIA atop of the leaderboard in the most recent weeks, cementing its key role in investor psychology." NVIDIA's upcoming earnings report is crucial for several reasons. Analysts expect the company to report a second quarter revenue of $28.68 billion, which is a significant increase from the $13.5 billion in the same quarter last year. NVIDIA has consistently beaten revenue over the last 7 of 8 earnings reports. This showcases its strong performance. Moreover, NVIDIA is positioning itself as a central player in the AI ecosystem akin to Amazon in e-commerce. Kevin McMahon, CIO of Hennian and Walsh, anticipates that NVIDIA will surpass expectations essentially in its data center business, further solidifying its dominance in the AI sector. However, some experts caution that NVIDIA's stock might face short-term setbacks. Gene Munster, managing partner at Deepwater Asset Management, points out potential supply-demand imbalances and delays in the Blackwell project, which could negatively impact investor sentiment despite the company's long-term growth prospects. Technical analyst Carter Braxton Worth remains bullish on NVIDIA, advising investors to adopt a long-term strategy around earnings period. He believes the company stock will continue its upward trajectory based on technical indicators. So this gives us pretty much a key takeaway that a lot of people are still bullish on NVIDIA, including me. There's a very high probability, I would say 80-90% or higher, they're going to annihilate earnings. And out of that remaining 10 or 20%, almost all of it is that they're going to beat it slightly. The chances of NVIDIA falling is low, but I've got a couple of strategies that I'm going to show you guys how you can implement into your portfolio to take advantage of NVIDIA if you haven't already invested in this company. I constantly am teaching my students, you don't want to invest really around earnings time if you don't know what you're doing. And you definitely don't want to be tying up a lot of capital in an earnings play, as it could go in the exact opposite direction that you are intending. If you buy puts, it could go up. If you buy calls, it could go down. If you buy shares, it could go down. But I teach this in my Discord to my students, how to fundamentally get stronger in the stock market, understand the psychology, the fundamentals, the technicals, the financials, everything about the stock market. There's so many different key factors of the stock market. If you guys are new to trading and having a hard time, or maybe you've been trading for a while and you're just not profitable, you're losing money, making bad trades, letting your losers run, but cutting your winners short. Well, I feel your pain. It's really difficult to be successful in this market, especially in a time like today. However, I have taken great efforts to teach and to mentor many people just like you to becoming successful. If you are interested in taking control of your financial freedom and your financial wealth, I would love to help you achieve that goal. I offer a full Discord to surround yourself with like-minded people just like us to learn from, a full training course. This way you guys can spend countless hours learning all of my tips and strategies that I have designed around my last 7 years of trial and error in the stock market, which is working for all of my students. I have several students that are up 10 to 15% their first month, and I have quite a few that are over 20%. If you guys are interested, I offer these as well as one-on-one coaching to help you achieve your financial goals and your financial freedom. I also launched another masterclass boot camp for a limited time only. Masterclass boot camp is significantly more advanced than the regular coaching. Very limited spots remain in the one-on-one coaching and boot camp. So if you guys are interested, you can sign up at investorcorey.com right there on the screen or in the information box below. Like I said, this is a very serious mentorship. So if you are committed to your financial freedom, I would love to help you. Like I said, you guys can sign up at any time, investorcorey.com. So I'm going to show you guys right now a couple of strategies that you can run in your portfolio to make money on NVIDIA. So here is NVIDIA. What I would do for strategy number one, it's like the collar strategy. It's very safe. What we're going to do is we're going to wait for the stock to kind of come down a bit in the morning if it does, but if it starts to go up right away, we're going to buy right away. 100 shares. So let's say we get in at 127.50. We're going to wait for the stock to start to go up throughout the day. And as it goes up throughout the day, which almost inevitably it's going to do because it does this every time. Every company does this during the day on earnings, or most of the time. We're going to wait for the stock price to come up, and then we're going to buy a put. The reason we're doing this is we want to buy a $127 put, but we can't do that until the stock goes up. I mean, we can, but realistically, if the stock price comes up to 130, this put that would have been $500 is going to be like $300 or $250. So we're going to save some serious money. So we're going to buy, let's say at 127.50. We're going to wait for the stock price to settle and come up during the day. And as it comes up, let's say around 1 o'clock, 2 o'clock in the afternoon, maybe 3, we're going to buy this 127 put. And then now that the price has moved up, we're going to go ahead and sell a $134 covered call. This call option is going to pretty much cover this put. So now let's say the stock price plummets to 110 all the way down like so. It's not going to matter because you bought the put. Before we discuss prices, let's look at the actual prices for NVIDIA. So we buy 127.50, but then we're going to buy a put for 127. Now, realistically, if the stock price goes to say 130, the 127 put is going to be the equivalent of what 125 would be right now because it's $3 away from the money. So 515. So we're going to buy a 515 put and we're going to buy the shares. So $12,700 plus 515, but then we're going to sell a $134 covered call, which will be $400 away from the money. Or let's go $500 away from the money, 135, which is the equivalent of what a 133 would be like right now. So 133 is about 480. So we're going to minus 480. So basically the put is free. So now we're into the stock for 127.35, which is really good. It's less than the actual price. If the stock goes to 140, 150, at least 135 or above, we just hold the stock and get assigned on Friday and we will collect $135. $13,500. We made $765 free money with no downside. And the reason I say there's no downside is because we had $12,735, right? So there's $2,900 roughly on this put. So the stock drops to $100. You now sell the put for $2,900 and you only have $9,835 in the stock. So if the stock was to plummet to $100, you still only have $98 per share of investment, or $98.35. You're still $1.65 per share, or $165 in the green. You can hold the shares, and when it runs to 140 in 6 months or whatever, or 3 months, now you're up $4,000. You could sell the shares and still be up $100 or $200. Or you could sell covered calls to 102, wait for that to happen in the coming weeks, collect a month worth of premiums, which is about $800 plus 200 or 300 on the shares, and make another 1,000. There's no way to lose in this scenario. The only downside in the collar strategy is if the stock runs to 150, you are limited on the covered call you sell, which would be 134, 135 is what we've done the math on. So you only stand to make $765 if you enter the stock at 127.50 or 127. So you're limiting yourself to a $700 or $800 profit per 100 shares, but there's no downside. Even worst case, you're at break even if it goes down. Maybe the put's worth $2,700, not $2,900. It's going to be worth, no matter what, if it goes to $100, it's going to be worth $2,700 because that's the intrinsic value of a $27 put or $127 put. You cannot lose money this way. You're limiting all of your downside for a modest profit. If you don't sell the covered call, you still have the put. You still covered all of your downside, but now you can run to the moon with profits. The difference is if the stock was to drop, you'd be $480 more in the negative because you didn't sell the covered call. So if we add 480 to this, worst case, if you don't sell the covered call and the stock drops to 100, you're going to be into the stock for roughly $100.31. So if we divide this by 100 shares, the only bad thing is if the stock drops to 100 with the put and you don't have the covered calls, you're going to be into the stock for 103. So you're going to be out $300 if the stock drops due to you not selling the call. But you can make up for that just by waiting for the stock to recover or selling a covered call 2 to 3 weeks out after earnings. That would make you back the 300 you lost. You'd be at break even. And if you sell 103, you're now up $300 profit. So you can either take a slight chance at losing a couple $100 on the downside, but then selling covered calls to make it back and make a small profit. And if the stock runs, you make a ton. Or you can hedge all downside so you're guaranteed pretty much no loss, but you cap your upside. So selling the covered call is up to you, but I would buy the shares, wait for the stock to go up, then buy the put. Every 100 shares, buy the put. If you believe in NVIDIA and you don't want to buy the put, that's on you. I recommend the put because it caps all downside, but it's ultimately up to you. If the stock runs to 150 and you got in at 127.50, well, then you just made $2,300. Who cares if you throw $500 away for insurance? You have dental insurance, right? You have car insurance, homeowners insurance, renters insurance, health insurance. Why not insure your money? If the stock runs to 140, 145, where I think it will, even 140, you're making $1,300. Just put 500 down to make sure you don't lose any money. Because like Warren Buffett said, a big part of the stock market is not just making money, more importantly, a lot more. Rule number 1, don't lose money. Rule number 2, see back to rule number 1. And rule number 3, see rule number 2. Don't lose money. Buy the shares, let the stock go up. This way, the put's cheaper and buy the put. This pretty much guarantees that you lose no money. This is a Mark Cuban type strategy. He did this. Google it. In fact, maybe I'll make a video on it. Mark Cuban ran this exact strategy, and it's how he protected his money and made billions. This is powerful. So if you are able to put 100 grand, hypothetically, into NVIDIA, and you were to buy 10 put contracts, you've hedged all your downside risk. But on 10 contracts, you could make $3,000, $4,000, $5,000 in minutes with no risk on NVIDIA. It's a very great strategy. But you know what? What if you have a very small portfolio and you can't afford $12,000 to buy the shares and another $500 to buy the put? What if you're like, Corey, hey, hold on a minute. I don't have 12 grand, bro. I've only got 5 grand. Like, what about me, dog? What am I going to do? What if you're like, Corey, I don't have 12 grand. I only have 5,000. What about me, man? Did you forget about me? Well, guess what? I have not forgot about you. I've got a strategy just for you and the small portfolios. And I'm about to show you guys how powerful this is to make money on earnings. Before I do that, like I said, if you like these strategies that I employ in this video, I have a full training course, Discord, and one-on-one coaching that teaches these strategies in depth. I coach you guys how to implement them, how to understand them, and how to get better with them. If you guys are interested, I also just launched my masterclass boot camp. Very limited spots remain. I don't know when the next boot camp will be, but this is the ultimate coaching session or series of coaching sessions over the course of 6 weeks to teach you every fundamental tip and strategy I have ever learned, as well as understanding the market. If you guys are interested, you can sign up at investwithcorey.com right there on the screen or in the information box below. I'm going to say it real quickly and simply. All of my students make 10 to 15% their first month. In fact, I have a couple of students, and one particularly that was in the hole, $4,700 on his account, and within 6 weeks, he's now $5,000 in the positive. On an $8,000 account, he has turned $9,000 profit, 150% in 6 weeks. This could be you, and I would love to help you. I look forward to speaking with you, but it's a serious mentorship, and I will see you guys over there. Investwithcorey.com, click on training, and I'll see you soon. So this strategy is very simple. We are going to buy a call going out this Friday for about $130, but it's $615. You can do that. If NVIDIA runs to 100 and let's say $35, you'll make $70 maybe. No, actually 50. 136, you'll make less than 40. Not that good, right? Well, if you sell, this is a little trick I'm going to show you. You sell the 131, you can now get into this for 43. Well, guess what? You don't get to wait for the stock price to go to 136 to make 45 or $50. If it goes to 131, you make 57. So you make the same money. That's right. I know. The exact same money, $6 earlier. And you get it for only $43. It's like a cheat code. You see, why spend $6.15 when if the stock price goes to 136, you're only making $34. Whereas if you sell the 131 at 131, you make $57. What if we bought a couple of these? What if we decided to buy 12 of these, which would equate to 516? Let's buy 14. There we go. $600, the same price as buying the call option. But we make $800 if the price goes to 131. So why spend $600 to make $50 if the price goes to 136 when we could make $800 if the stock goes to 131? $5 lower, and we make like 16 times the return for the same $600. So you don't need to buy this $600 call to make $50 when you could sell this 131, spend the same $600 and make $800 if it goes to 131. There's a very high probability, very high likelihood that NVIDIA is going to be well over 131. So by executing this trade today, you very well could print a nice 110, 120% return on a small portfolio. This is a very powerful trade. I would try to open this as soon as you see this video and then sell it even at a partial profit today before earnings. If you want to hold it through earnings tomorrow and try to reap more of these rewards on Thursday and Friday when the stock runs even more, you can do this, but there are risks. So just know these risks, that there is a chance NVIDIA could go down. There's no guarantees, but for a small portfolio, this ultimately is the best strategy. Every contract's $40 to make 60. This is ultimately a 100 to 120% return. So hope you guys enjoyed today's video. Remember, fam, exercise caution with your portfolio. Don't operate any more than 5% at a time or 10% at a time in one stock or options play. Be very safe, fam, and I will see you on the next video. Put a video right there for you. You guys are going to love it. Click it. I'll see you over there. Until the next one, remember, let's grow our wealth together. Take care, fam.